If you owned a home while you were active duty military and then PCS'd away and rented it out and subsequently sold it, listen up. I'm going to tell you about an IRS code that could save you thousands of dollars. My name's TJ Courtney. I'm a realtor here in the Oklahoma City Metro. I am not a tax advisor, so this is for informational purposes only. But this is actually a tax code I used as an investor to eliminate significant capital gains tax. The capital gains code is IRS Code 523. And what it does is it extends the 2 of 5 test 10 years for military that are PCS'd away on qualified orders. Okay. So what that does is while you PCS to your next base and you rent it out and you subsequently sell it, it gives you a 10-year extension on the 2 of 5 test. So let me give an example, and this is right out of the tax code. Okay. So Mary bought her house April 1st, 1999. She was active military. Let's say she was in the Navy. And she owned that house all the way until July 31st, 2015. And I'm going to put the example here below. Okay. She was PCS'd away from her house August 27th of 2002. So from August 28th, 2002 through July 13th, 2015, she rented her house out and then sold it July 31st, 2015. So if we take that 2015, July 31st, 2015 date, and we back it up 10 years, that's the suspension that the IRS code gives her for being active military. That brings her to August 1st, 2005. Then we can add on the 5 years for the 2 of 5 test, which takes her back to August 1st of 2000. Now, she lived in the house from August 1st of 2000 through August 27th of 2002, which is a little over 24 months, which is a little over 2 years. So she meets the 2 of 5 and is exempt from capital gains. This is a great benefit that the IRS has given active duty military for serving. And the thought is if you PCS away from your house and you want to move back into it, well, you've got to rent it out or pay 2 mortgages, which no one has the money to do typically. Okay. Now, if you want to take it one step further, and this is just personal experience, I was able to recapture my depreciation by using the same argument. And I have my CPA go back to the IRS and say, hey, he was PCS'd away. He had to rent it out. And so he shouldn't be penalized for depreciating because he was required to do so. I was reimbursed my depreciation. So I can't promise that, but you can ask your tax advisor if this is something they would be willing to look into. So again, IRS code 523. I've had a client that had a $14,000 tax swing when I told him about it. It's pretty significant. So worth your while to look it up. If you sold in 2025, it'll impact you this year. If you still own a rental property, you may want to look at that timeline because homes appreciated pretty significantly back in 2020 through 2022. So you may have a pretty significant tax bill when it comes time to sell if you bust this timeline. So make sure you look up the code. Again, I will put it in the comments below, a link for you to look it up. All right. Let me know if you have any questions.